Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Monday and it's the 26th of June. My name is Russell Shaw. I'm a senior market specialist at FXCM, and my email address is rshaw@fxcm.com. If you need to contact me, just use this address and I'll reply as soon as I can. I'm just going to go ahead and bring up the disclaimers. We'll start off with the high risk investment warning. Good morning, Kim. Terrific to have you on the webinar. Thank you very much for joining. Thank you, everyone, for signing in this morning. Very much appreciated. I'll just keep the high risk investment warning on for a few more moments. All right, let's bring up the market commentaries disclaimer. Right, and the references, MarketScope 2.0 and TradingView.com. And what we'll do is we'll just open up the webinar with taking a look at TradingView, just taking a look at the US 2-year versus the greenback. We're going to do a little bit more analysis regarding the US dollar, but just wanted to show the movement up here in terms of the US 2-year yield. And I'm just going to make this slightly different colors. So you can see that the 2-year yield, which is very much a proxy for monetary policy, moving in that northeast direction. Dollar not quite buying it, not quite buying. It's sort of moving different directions, diverging. Nevertheless, I think that there is some interesting chart action on the greenback, and I just wonder if there is some sort of influence, one from the government bond, I think about the government note yield, and I beg your pardon, and the second influence, perhaps, we had a very tense weekend. I don't know if any of you saw the Wagner group moving up towards Moscow, very tense on Saturday afternoon. And I wonder if there is some capital that is moving into the dollar because of that. The dollar is generally a safe haven. It's generally a safe haven, and I just wonder if the geopolitical tension, if there's some sort of spillover there. The situation obviously was de-escalated, and what we've seen since then is some calm. Let's take a look at the US dollar. And you can see last week there was a terrific movement up by the greenback. See last week this big movement up. It didn't quite take out the previous week's high, but it came pretty close. We're a pip or two away from taking out the previous week's high. This is a big blue candle. Very few indications of bearishness at all. In fact, you can't even see real shadows. I mean, the shadows there are tiny shadows. So really a big week for the US dollar. And the broader pattern is effectively a symmetrical triangle to the sideways. So you can see that we've bounced off of the lower boundary and we are moving in this northeast direction, towards the upper boundary. So is there some sort of bullishness that's starting to manifest in the greenback, or are we just seeing some chop from the sideways triangle? So I think there's two ways to look at this in terms of the RSI. You can see that the RSI starting to pop above 50. 50 is the neutral. Above 50 is the bullish side of the oscillator. Below 50 is the bearish side of the oscillator. So it looks like we're pushing towards the bullish side, and we're just going to watch to see if it chops around at 50. So you can see as the symmetrical triangle moved to the right, you've got this chop around the zero. As long as we can continue to consolidate, I'd expect to continue to see chop around at 50. But if we get a breakout, so we said that it looks like we're getting this northeast movement here because we have effectively bounced off this lower boundary, and we're getting the movement towards the upper boundary. I wonder if that breaks through. Do we see that breakthrough? And if we break through, let's keep an eye on the RSI, because the RSI effectively, if it stays above 50 for a protracted period, there may be some sort of bullishness starting to come in. All right, so a bounce off of the lower boundary within a symmetrical triangle. Let's go down to the daily time frame and see what the daily time frame is telling us. And you can see that it's neutral. All right, you can see it's gone into zone 2. Zone 2 is between the two blue bands. Zone 1 is the upper blue, upper red. That upper blue, upper red is the bullish area. Lower blue, lower red is zone 3. That's the bearish area. And between the two blues, that's the neutral area. And we've moved into that neutral area. So we've moved from the bearish channel into the neutral channel. Well, that's relative strength. We're not quite in the bullish channel yet, but the movement from weakness into neutrality is relative strength. And we sit now in the neutral area. Well, that kind of synchronizes with what we're seeing with the weekly chart. The weekly chart seeing this symmetrical triangle. Well, that's a consolidation. It's a neutral pattern. We're waiting for the breakout there. And the dollar zone analysis telling us, well, yes, we are neutral. What's interesting is we do see the relative strength on the RSI. How so? Well, it's moved from below 50 to above 50, and above 50, remember, that's the bullish side. It's the bullish side of the oscillator. The longer it stays on the bullish side, the greater the probability that we move into zone 1 here. So we just want to keep an eye on the movement between zones. Now, there is a bit of an issue in that, how do we trade the greenback, or how do we use this knowledge to our advantage? It's very tough. It's very tough when we're sitting neutral. When we are in a bullish area, we tend to move up. When we are in the bearish area, we tend to move down. When we're in the neutral area, well, which way do we go, right? We may say, look, we've got the relative strength here. We've got the movement from weakness into neutral. We've seen some really bizarre geopolitical developments over the weekend. Perhaps there is some sort of movement into safety. If that is the case, then what we've got to see on the hourly chart is we've got to see some bullishness coming through on the hourly chart. Let's see how that could possibly manifest. Okay, let's take a look and see how that can possibly manifest. And what you want to take a look here is if we get a golden cross of the EMA. So do the EMAs, does the fast moving green cross above the orange moving average? That would be trigger 1. We would see the second trigger if the stochastic moved bullish as well. And if we get those two triggers, well, if the greenback manages to go through to the upper quintile and hold, then we potentially see money moving into the greenback. Now, the last time we went above 80 and held, so this is holding above the upper quintile. Okay, let's just mark that off. You can see that we had a terrific swing. So the idea here is, do we get the bullish triggers? And if we get the bullish triggers, does the stochastic move into the upper quintile? Now, if we do see that, and this is really the crux, If we do see that movement into the greenback, it's money moving into a safe haven. If there is money moving into a safe haven, then we would expect the risk markets, the stock markets, to be showing signs of pressure, showing signs of potential weakness. Let's go and take a look at the stock market indexes to see if there is some sort of weakness that is starting to manifest there. Let's start off with the DAX. Okay, bringing up the DAX. All right, this is interesting. So let's start from the top down. What we're looking at here is, and we've started the labeling of the peaks and troughs again, but by and large, before we restarted the labeling, we looked at the DAX as an uptrend, and I think that uptrend does remain. But I want to move to the right side of the chart, and I want to see if we can get some sort of directional bead on what's happening on the right side of the chart, which is what we need to do because we trade on the right side of the chart. DAX moving sideways, okay, DAX moving sideways. Now, look at this. This is very interesting. I'm going to go back to the US dollar, and then I'm going to come back to the DAX. So going through to the US dollar weekly, okay, just bear with me while it comes up. Okay, just want to take a look at last week's price action. We've got a strong blue candle up. Let's go to the DAX. Strong red candle down. See that? Moving opposite to one another. So perhaps some sort of weakness is starting to show. Let's go down to the daily, and you can see, well, we're actually in zone 3. Okay, that's interesting, isn't it? So we have gone into the weak area here. So zone 3 is the lower blue, lower red. So that is the bearish channel. Where's the RSI? RSI is below 50. We are on the negative side. So there does seem to be some weakness presenting itself, but we've got some blue here. We've got some blue here. Well, that's a potential rally in a downtrend. This could be perhaps exploitable to the downside. Let's go down to the hourly and see what we need to happen with the indicators. So if there is going to be some sort of weakness, we would need to see the EMAs cross to the downside. We would need to see the stochastic cross to the downside, and would need to see the stochastic move towards the lower quintile. Now, what we need to see would be lining up the hourly chart with the daily chart. At the moment, we don't have those signals. We don't have those crossovers. So keep an eye on this, put this on the watch list, but keep an eye to see if there is some sort of resistance that comes in. In other words, does the sort of resistance at this area actually act on the DAX? If it's going to act on the DAX, go back to the US dollar and see if the US dollar is showing some sort of strength. In other words, does the central pivot, are we getting some support coming through from the central pivot? So there is a tension. It hasn't quite sorted itself out yet. You can actually see that there is a little bit of a selling tail coming through on the dollar, and there is some support that's coming through on the DAX side of things. So we've got this interplay going on between the havens and the risk markets. We have to see which one is going to win out. Let's just take a look at NASDAQ, I beg your pardon. And again, we'll do a top down. We'll start at the top we'll work our way down. So NASDAQ on the weekly, just as we saw the blue candle from the dollar, there's a red candle from the NASDAQ. NASDAQ's very overbought. Okay, I think this RSI is going to have to normalize fairly soon. It's been overbought for quite some time. If we take a look at the daily chart, well, what's happened here is we've seen relative weakness. Can you see that? It's moved from zone 1 and it's slipped into the neutral area. But a movement from strength into neutrality, that's relative weakness that's coming in. We don't quite have the the RSI dipping below 50 yet, but I'm quite nervous about this weekly overbought condition on the NASDAQ. Let's go down to the hourly and see what's happening on the hourly. And you can see there is some bearish pressure that's building. We're getting a potential crossover on the EMAs. We're getting a crossover on the stochastic. Those are the two triggers. If we drop below 20 and hold, it will seem to me that there is pressure on the NASDAQ. Again, I would go straight back to the dollar and see if the dollar is got a tailwind, if there is some sort of movement up in the greenback. Then we're seeing that tension between the risk on, risk off instruments. There's one more that I want to take a look at, and that is gold. Gold typically moves in the opposite direction to the dollar. We've suggested that the dollar might be showing signs of strength. Might be. It's still in that symmetrical triangle. What is gold telling us? So let's just spin up the precious metal. And top-down analysis here. We've got our peaks and troughs. I'm actually going to move this here. I'm counting this as one leg. Although there has been some interplay over here, it's very difficult. We've got a outside day, inside day, and then a continuation of the downtrend. So I'm putting the trough here, so we don't quite have a directional bias on gold yet, but we do have a momentum that has dropped to the bearish side of 50. Well, if gold's coming down, because we don't have the trend yet, if gold's coming down, then potentially we do have the tailwind for the greenback. If we go to the daily chart here, we're in the bearish channel. If you take a look at the RSI, it's below 50. And then if you take a look at the hourly chart, it looks as if the hourly chart EMAs are starting to cross down. That's trigger 1. Do we get a trigger 2? And if we get a trigger 2, is it going to drop towards the lower quintile and hold? And if we get a movement towards that lower quintile and holding, again, I would suggest money moving into dollar as a safe haven, risk assets feeling a bit of pressure. That wouldn't be surprising given how overbought NASDAQ is. All right, so that's where we're going to go for this morning. If there's any questions, please go ahead and type those in. Any questions, go ahead and type those in. Okay, nothing coming through. So let's conclude at this point. Thank you very much for joining me. I wish everyone a good day, a good evening ahead, and we shall chat tomorrow morning. Thanks very much, guys.